Warner Bros. Discovery CEO David Zaslav modifies company policies for a larger, fatter salary after firing Johnny Depp and canceling scores of films for tax benefits. As part of his plan to boost the company's profitability, Warner Bros. Discovery CEO David Zaslav suddenly began canceling movies and television shows earlier this year, which raised a lot of concerns. He reportedly earned $246.6 million in 2021 as a result of Discovery, the media firm he oversaw, becoming successful. In 2022, the company's financial status was challenging compared to the year before. A little over $43 billion in revenue and $9.2 billion in EBITDA were reported. The FCF's estimate of $3.3 billion seemed accurate. Everything happened as expected or even better than expected, proving the company's excellent financial situation. Yet, it's crucial to keep in mind that the company's guidance was lowered due to the difficult start to the year. As a result, Warner Bros. Discovery's senior executives are urged to communicate the company's new corporate priority of increasing free cash flow and reducing debt. According to recent reports, David Zaslav, CEO of Warner Bros. Discovery, declared on March 6 that the company will modify the compensation arrangements for its senior executives to provide tax advantages. If they are successful in increasing cash flow and reducing the company's leverage, they will be rewarded with performance stock units. Due to the merger of Warner Media and Discovery in 2021, the chief executive officer of WBD, David Michael Zaslav, reportedly received a total remuneration package worth $246 million. Of course, a significant percentage of that remuneration will be contingent upon performance, more specifically, on share price, a metric that few entertainment companies have recently been able to meet. In the following weeks, his 2022 pay will be made available to the public. Based only on the company's forecast for 2023, the FCF yield is predicted to rise from there and should reach 15%. According to WBD board chairman Samuel Adai Piazza, Jr., the adjustments to the Warner Bros. Discovery executive compensation program are meant to further incentivize employees of the company. According to a statement he gave to The Hollywood Reporter, members of the leadership team and other individuals whose contributions are crucial to accomplishing the primary near-term financial goals of improved free cash flow and decreased leverage will be included in this. The untitled third Fantastic Beasts installment's London cast was informed by Warner Bros. On November 5 of last year that Johnny Depp had been abruptly dropped from the filming schedule. The actor, who was scheduled to reprise his role as the malicious wizard Gellert Grindelwald in the five-picture series, had been in a relationship with Toby Emmerich, the head of the film department for the studio, until the previous day. According to sources cited by The Hollywood Reporter, Warner's wanted to wait for the results of the legal proceedings before choosing whether to keep Depp in the franchise or not. Management expects that in 2023 and 2024, generating considerable free cash flow will be a primary emphasis in order to considerably reduce debt leverage. WBD stated that it is on pace to lower its leverage from 5x at the end of last year to 4x by the end of 2024 and reaffirmed that it will be in the 2.5x to 3x range by then in a recent earnings call with analysts. Yet to achieve that, it requires cash to settle that debt, which is why free cash flow is once more under the spotlight. WBD took decisive action to reduce expenditures last year, which included shelving a number of significant films. These purportedly included layoffs associated with the transaction and a $3.5 billion write-down of content. In order to create free cash flow, the corporation intends to make its streaming services viable. There is a growing need to make streaming